If you have Parent Plus loans, you're not alone. Over 3.5 million borrowers have over $80 billion of Parent Plus loans in the United States. That's tough to say because it hurts. So the average balance is only about 20,000 or so, but I've seen way more than that. Sometimes people even borrow for multiple children because you've got multiple kids going to different private universities, and before know it, you might owe 100,000, 200,000, or even 300,000 of Parent Plus loans. The worst part is you take this debt out right as you're in your 50s, 60s, or even 70s, and you're getting ready to retire. What do you do when you have so much debt, and maybe you even are challenged from two fronts because maybe your kid's not able to get a great job? How do you deal with this loan repayment? Maybe you don't even want to put that burden on your kids, and you want to make sure that you take it no matter what. Regardless of whether or not you're trying to get the loans restructured in your child's name, or if you want to retain the responsibility yourself, you have options. Many people could qualify for loan forgiveness on Parent Plus loans if they simply knew the rules better. The first option that you could qualify for loan forgiveness would require consolidating your Parent Plus loans into a direct consolidation loan. That would only be eligible for something called the Income Contingent Repayment Program. This program is best for folks who make a relatively low income, say 40, 50, 60,000 kind of range. This would allow you to pay a minimal monthly payment and stretch out that repayment for a lot of period of time. So what you could do on this program here is you could consolidate your Parent Plus loans, and you could pay for 10 years on the Public Service Loan Forgiveness Program if you worked at a not-for-profit or government employer, and then your Parent Plus loans would be forgiven tax-free after 10 years of service. Another option if you're in the private sector is if you consolidated your Parent Plus loans and got them onto the Income Contingent Repayment Program, you're paying 20% of your discretionary income. So that's basically your income less 100% of the federal poverty line for your family size. So for example, if you're a family of two, maybe the federal poverty line is $20,000. If you're making 60 in your family, 60,000 minus 20,000 is 40,000. So then your annual required payment would be $8,000 a year. That's how they calculate this. While that's challenging, say that you're also at the same time saving aggressively for retirement, which you need to be doing anyway. If you're putting a lot of money into retirement savings, you might be able to minimize your payment accordingly and have such a small repayment that since you're going to retire soon anyway, you might be able to pay a relatively small amount, and then if you're planning on living mostly on Social Security savings, then you could keep your payment super, super low and potentially benefit from loan forgiveness for the 25-year ICR plan for Parent Plus loans. So you pay based off of whatever they tell you to pay, the absolute minimum, and at the end of that 25-year period, the loans are forgiven. It's technically considered taxable income, but the reality is there's something called the Insolvency Rule, and you might not actually have to pay taxes on that forgiven balance if you have fewer assets than you do liabilities. Even if you do have more assets than liabilities, the tax is probably going to be something that's able to be managed or put into some sort of payment plan with the IRS. While this is not the ideal scenario, this is exciting because it takes somebody who's burdened by hundreds of thousands of dollars of Parent Plus loans, or even just significant Parent Plus loans, and it gives them options. I have some clients that choose to have their children refinance the loans in the children's name. There are banks that will do that, and if you go on the website, you can click around on these refinancing links and get a cashback bonus for doing so and a lower interest rate. Another option is parents, you might be able to refinance your Parent Plus loans to a 3, 4, 5% kind of interest rate and pay it down really quickly so that you can not carry this debt into retirement with you. But for those of you looking for loan forgiveness, the best candidates for this are somebody working in the private, in the not-for-profit or the government sector, or it's somebody who has a relatively low income. Maybe your primary net worth is in your home. You might have a modest level of retirement savings, but certainly nothing huge. And in that case, what you could do is make a rush for saving enough so that you can fund all of your retirement needs up until age 70, and then wait to claim Social Security at age 70 for a benefit that's as much as 40% higher than if you take it at the full retirement age of 66. So this is a tremendous knowledge drop I'm giving you right now. If you're interested in having us make a custom student loan plan for you, send me an email, travis@studentloanplanner.com. I'd be happy to share some information with you. Thanks so much.